The minimum wage in the United States is only $7.25 an hour. So that may lead many of you to believe that it's impossible to become a millionaire with a low salary. But is it? It turns out there are around 22 million millionaires in the United States, which means that around 1 out of 15 people in the United States have a net worth of $1 million or more, many of whom have amassed great fortunes without high-paying jobs. Take the story of Ronald Read, for example. Ronald Read was born in a poor family of farmers and worked as a janitor and gas station attendant most of his life. And when he passed away, the community that he lived in was surprised to find out that he had a net worth of approximately $8 million upon his death.
Hey, that's pretty good.
And that he donated $5 million of that to his local hospital and library. So that brings about the big question. What do you do to become a millionaire? In this video, I'll be showing you how you can become a millionaire with 5 simple lessons, even if you aren't earning a lot from your full-time job. So the first lesson is to automate your savings. Have you ever had a goal of saving, but by the end of the month and after paying for all the bills, your gas, your meals and random expenses, you found that you just had nothing left? It's okay, it happens to everybody. But there's one really easy way to get around it, and that's by paying yourself first. Instead of spending for the month and trying to save what's left over, decide from the very beginning how much you want to save and automate it. Most employers allow you to split up your paychecks to go to different bank accounts. So if your goal is to save 10% of your income every month, then ask your employer to send 10% of your income to a separate high yield savings account and then send the rest to your normal checking account where you spend on whatever you need to. Then, since you have already saved that 10% per month, you can spend the rest without feeling guilty. So whether you have a high salary or a low salary, you need to be able to save and invest to eventually become a millionaire. There are many people who have multiple 6-figure salaries but are still living paycheck to paycheck because they spend too much every single month. And speaking of investing, this leads to lesson number 2. Always be investing. Many people believe that investing is only for those who have a high salary, and this is simply not true. Investing has never been easier with the introduction of online brokerages such as Webull, who allow you to buy stocks through a mobile phone. The overall goal of investing is to grow your money, no matter how much or how little you make from your full-time job. Now, on average, the US stock market returns around 9% a year, which means that by investing in it, you're gonna double your money in roughly 8 years. Now, in the beginning, it might be discouraging to see the money growing so slowly, but the beauty of investing is that at a certain point, the investments will grow faster than the money that you put into it. So as an example, let's say we have 2 people. We have Albert and Barry, who invest in a fund that gives them 7% a year. Now, Albert invests early. He invests $5,000 a year at age 18, and he continues to invest that money every single year for the next 10 years. But 10 years later, he stops when he's 28 years old, and he just lets the investments continue to grow. On the other hand, we have Barry, who invests a little bit later, but he also invests the same $5,000 every single year, and he continues his annual $5,000 contribution until he retires at age 58. So by the end of it, Albert invested for only 10 years, and he only put in $50,000. Whereas Barry has invested $150,000 over a 30-year time frame. So by the end of it, who do you think will have more money? Surprisingly, Albert has more money over time with $602,000, whereas Barry only has $540,000. So the point is, it pays to invest as early as possible. Albert Einstein once said, "Compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it." When I understood how important it was to invest early, I opened a brokerage account right away. But then I encountered an issue. What should I invest in? So this leads to lesson number 3, diversification. No one knows what will happen in the future. And if they did, they would be trillionaires and they would win every single lottery. Since we don't know what will happen in the future, we need to be cautious with how we invest. Now, it may be tempting to put all of your investments into the most popular stock, but in reality, that's one of the worst things that you can do because you'll never know what will happen to a company over time, and any individual company can go bankrupt just like that. And so to easily diversify, we invest in index funds instead of individual stocks. With an index fund, you're investing in hundreds of individual companies at once. And by investing this way, the volatility goes down a lot, and the chance of an entire pool of stocks going down is much lower than the chance of an individual company going bankrupt. Plus, index funds give decent returns too. And besides stocks, we also hold a lot of real estate investments. And even within our real estate portfolio, we own properties in different markets and different property types. So all of this diversification helps us in case something happens to one market and one industry. So now you might be wondering, when's the best time to invest? And that brings us to our 4th lesson. Don't try to time the market. Think about it. Is there a way to time the market so that you buy stocks at the lowest point and sell it at its absolute highest? And the answer is no. So instead of holding on and waiting for a market to crash, it's much better to just continuously invest over time. Trying to time the market and trying to day trade is a quick way to lose money. If you try to get into day trading, just note that you are competing with people who have gone to top tier colleges and people who spend their entire professional career trying to make a few percentages of gains per investment. You're also competing with these trained computer algorithms who can tell if a stock is a fraction of a penny cheaper than it should be. So if all of these people and all of this crazy technology are struggling just to find some margin, realistically, how good are you if you're not super trained? Millionaires don't try to become wealthy by just trying to time the market. They do so by diligently investing and doing the buy and hold strategy. So when you're investing, you'll encounter market crashes and bear markets, but you need to continue investing during those times because that's when you can buy assets for a much cheaper price. People who panic sell during a market downturn often don't buy back into the market until the market has already recovered and then miss the rise back up. As billionaire investor Warren Buffett says, when others are greedy, be fearful, but be fearful when others are greedy. Time in the market is more important than timing the market. And that brings us to lesson number 5. And the final lesson that you need to know is to understand the wealth formula. The wealth formula is simple to understand, but relatively difficult to practice if you're not used to it. And it simply says that to be wealthy, your passive income needs to be greater than your expenses. That's it. It's so simple, and yet so many people are spending money on things that actually take money away from their pocket instead of buying things that give them a good return over time. So to be truly wealthy, you need to buy assets instead of liabilities. An asset is something that puts money into your pocket. Think about the things that appreciate in value, such as stocks, bonds, real estate. Many of these investments actually give you passive income every single month, such as my rental properties and dividends from stocks. So if you focus on buying assets instead of liabilities, you will eventually become wealthy. Now, I know that achieving your first million with a low salary is tough and challenging, but if you're eager to take action, it is possible. And if you're just getting started and you have no idea what to do, then go ahead and check out some of the free resources that we have, such as our masterclass, which is linked down in the description below. Thanks so much for watching, guys, and I'll see you next time. Take care.